Hey guys, all right. Welcome back to OTA Trading View Tools recap. We're going to go over the retest of the opening range. Gold and crude oil won big today again, but you had to take those targets, right? So don't get mad if you don't take targets in the morning. You got to remember, taking targets is money in the bank. So every target that you take, that is 100% money being deposited into your account, and you've got to grow your trading account that way. So let's take a look at what happened today. We're going to go through our process that we've developed together and use the OTA Trading View tools to take these trades and make money today. They both worked out beautifully. Let's go over it right now. Here's our OTA zone scanner, and you can put this anywhere on the chart, guys. If you wanted to put it like over here on your low time frame, you can do that as well. I just have it here so that we can focus on it. So market sentiment is to the upside. So we've got more contracts that we could take trades on located in the demand zone column, and gold is right up there. Crude oil is on the supply zone side, and those are the two contracts that we focused on. I don't know about you, but I can only focus on one or two contracts at a time when I'm trading live. Out of everything, the contracts that look best to me for the opening range breakout retest was gold and crude oil once again. Let me show you something really cool here on the zone scanner. So I've got the 1 hour and the 4 hour time frames on here. 1 hour being my middle time frame, 4 hour being my high time frame. The zone scanner is going to tell you what time frames to use for your contracts. So look what happens if we put the daily chart on here as our highest time frame. See, we only have that crude oil on here. So the zone scanner is telling you the supply zones that have a perfect 10 out of 10 on the point system is going to be on the daily chart and the 1 hour chart. So if you want to trade the daily and the 1 hour, these are the contracts you're going to use. When you drop it down, make it a little bit more sensitive, and you go to that 4 hour chart, it increases the opportunities, but you have to use the 4 hour and the 1 hour in order to take these trades. So now the scanner is picking up everything that's high time frame 4 hour and middle time frame 1 hour right here. So all the demand zones on those two time frames will be the strongest on these contracts. So it's literally telling you, if you want to trade any of these contracts, you better be using the 4 hour for the high time frame and the 1 hour for your middle time frame. So pretty cool little hack there. So let's get into it. Let's focus in on gold first. Go to the 4 hour chart because that's what the scanner is telling us to use. And we are going to look at the curve, right? So right here, we draw out the curve. Here is your supply zone. Here's that pretty much leg of the move. Here's the bottom of the leg on the curve. And what do we have going on here? Upward momentum on the high time frame. Upward trend. Perfect. That means we are looking for our breakout to the upside and a retest of the opening range. So cycling up on the high time frame, momentum filter is pointing up. Does that match with the 1 hour trend? Yes, it does. So what do? Now we go over to our 15-minute chart. First, do we have a Globex trap? There is no Globex trap here. Go to your opening range breakout. And here we have on gold, 15-minute opening range. And what do we get? Drop down to the 5-minute, and let's see what happened here. And it hit that proximal line beautifully right on this drop base rally on the 5-minute chart within the opening range. So right off the bat, we've got that break above, close above. Let me blow this up nice and big. We had that nice zone down here as well. When I was looking at this morning, coming all the way back down here, look what it would have had to have done to come all the way back to this zone. See this candle right here on the high time frame? It would have had to completely reverse all the way back down to here. This is a very bullish candle, and we were asking it to go completely bearish down to here. If it happened right away, if this got hit, even when, it was forming this drop base rally, that would have been the time to take it. But at this point, we formed this drop base rally that broke through structure. We get a break above, close above the opening range, and look what it does. Pulls right back, hits that proximal line, and rips to your 2 to 1. So let's see what that looks like. And then I'm going to show you what happened to me today on this trade. 2 full contracts, about $360 risk. If that is too much, you would just reduce your risk. $180 risk. Beautiful. $180 risk rips up to your 2 to 1 target, and actually right here really would have been your target right back into that high time frame curve. $910 move, a 5 to 1. Hits that 5 to 1, beautiful move, and happens very quickly. Let me blow this up a bit and show you what I did today using Fibonacci, which is why I did not get into this trade. I was trying to get a better price. So I used Fibonacci retracement. And remember, at the time, it was here to here. We get that breakout to the upside. Look where that 50% retracement level is, right at the bottom part of this demand zone. So what I did was I grabbed my stop loss. I put it below this candle here, $140 risk. It would have been a $60 risk, right? Right here or so, $70 really increased. See how the risk to reward increased? Price came back, hit the proximal line of that demand zone, and just ripped. I did not get into that trade, but I did make the oil trade, which we'll go over next. So let's just one more time go over gold. Why were we expecting a retest into this demand zone here? Because on our 4-hour chart, upward momentum, cycling up, 1-hour chart, upward trend, that gives you the green light to take the retest in an upward movement. That is what happened today. So we were ready for a breakout to the upside because we said upward momentum filter on the high time frame. It's even cycling up. We have a upward trend on the 1-hour chart. This thing's breaking out to the upside. We were ready for it. I had so much time. I was so ready for it that I said, hey, you know what? I'm going to draw some Fibonacci lines here. And oh, look at this 50% retracement level. At 50% retracement level, it's a very powerful fib line that usually gets hit. So this only retraced back to the 382, which was basically the proximal line of that demand zone. Do you see how that works? I just love that. It is absolutely beautiful to me to see that. So tried to reduce my risk and ended up missing the trade because we followed a process. We developed a process. We back tested the process. We are super confident because of that process and back testing. So this has been highly optimized, and which is why using the OTA TradingView tools, super, super powerful. I'm really excited to hear about what you guys are doing and making. Drop some comments in the chat room there and just let me know what's going on, and let's have a discussion. What sort of trades are you taking, and What are you seeing? What are you not seeing? And let's just have a discussion about it. So beautiful move today. You just can't get any more textbook than that. Pulls back, hits that proximal line, rips to a 5-to-1 entry. And depending on where your entry was, there you go. That's pretty close to a $1,000 move there today. $900, man, I'm kicking myself. I am kicking myself. And it's still going. And it's still going. All right, let's take a look at crude oil. So what's going on with crude oil today? Let's go through our process. High time frame, daily chart is matching up with the 1-hour trend on crude oil. Momentum filter is down. We're still cycling down, but remember, we are super low on the curve. We were actually still within the curve. We're getting to a point where we're looking for some type of upward move, and look what's happening here. Never pulled back down into our buy zone here where we were trying to buy some crude oil now. This is all good sign. Let's go over what happened today because we made some money on crude oil. High time frame, momentum is down. Middle time frame, trend is down. So what's going to happen today? We're going to have a breakdown, right? Here it is. Remember, you're on the 5-minute, right? So on gold, we were on the 15-minute. So when you go to your opening range breakout tool, you want to click on to 5-minute, uncheck the 15-minute, and now you're ready to go for crude oil. So what happened today? Here is the move that took place. We are inside of the high time frame curve. So little scary, but momentum and the cycle is down. High time frame, very strong downtrend. We're not extended yet on this 1-hour trend. I was hoping to get an extended trend here into the curve, and we might still get that. That's really what we're looking for. We're looking for some kind of extended trend so we can start going long, but it looks like we've closed above that 50 already. But we are sideways. We are sideways right now. Here's the top of the leg. Here's the bottom of the leg. Look at that. How do you trade this? I wouldn't. Now I would totally be just watching and waiting for some structure to get broken and start looking for that upward move, which we all know oil is going to go back up. It usually does. They love buying oil back around $70, and we are below that. I'm going to show you a couple of things that I'm looking at, but let's go over the trade. So again, downward momentum, cycling down on the high time frame, middle time frame chart, downward trend. We're ready to go. We're ready to go. We're waiting for some type of breakout to the downside. Breakout to the downside. So here's what happened this morning. We broke out to the downside. Great. We were expecting that. Pulls back. Where does it pull back into? Pulls back. Here it is. Let's do this on replay. All right, let's just show you what happened here. So this is what we're looking at. Plenty of time to draw these out. When you know what's happening ahead of time by using your OTA TradingView tools, you're going to be prepared. So you have to be up. Oil opens up at 9 o'clock. We wait for the opening range, which is 9:05. That's this bar right here. And then we look for the setup. So we have plenty of time. That's what you need. You need something that's highly visual and that prepares you for the trade. Okay. That is everything. So that you're not running around haphazard. Oh, what am I going to trade? Let's go through all of these. No, it's right here. It's right here on your scanner. We know exactly what we're focusing on. So if you wanted to take it here and here, that on the full contract, it's a little expensive, right? So let's use our risk manager. Go to the risk manager, and it's going to tell us, here's the line. Click onto an area that's close to the zone. Here's your entry. Here's the stop loss. What is your account size? Is it a $20,000 account? Is it a $5,000 account? You got to put that in there. Let's just say 20,000, apply. And from there to there, let me uncheck the magnet. Let's make this bigger so that you guys can see it. Large. 2 to 1, 3 to 1, 5 to 1. Let's take a look. Saying 0 contracts. It's too expensive. On a $20,000 account, this is too expensive. So what do you have to do? It's really like there, right? There's your stop loss. Okay, much too expensive. We got, what if you use the body of the candle? Let's bring this up, see if we can buy it at the body of the candle. There you go. One contract, it's $113, totally acceptable, right? For a $20,000 account. Perfect. We're under 1% of our $20,000 account. Beautiful. So plenty of time to do that. So let's see how it worked out. Pulls right in there, hits that proximal entry. And remember, we're doing this now. Pretty scary, right? That came back pretty rapidly. You're like, looks like it's going to stop me out, but it held. You don't know. You don't know what's going to happen. Now, because we only have one target, because we only have one contract, my rule, and I implore you to adopt this rule. If you have one contract, guys, using your OTA TradingView tools, please take the 2 to 1 entry. Please take the 2 to 1 entry. I have back tested this. More than 76%. My numbers, my data says 76% of the time it hits that 2 to 1. Why wouldn't you take that? After the 2 to 1, it gets a little dicey. Sometimes it hits, but if you want to grow the account, take that 2 to 1. Guys, 2 to 1 entry, 76% of the time working out, that is money in the bank. Literally, taking the 2 to 1 puts money into your bank account. Do it that way. So what did we get? It hits that entry point. Let's sell it. And this is how you can work. This is how you can back test everything. Hit that sell, which it actually hit a little bit above, right? It actually entered right there, but because of the mechanism here, we can only take the entry point there, but whatever. So let's move forward and see what happened here. Boom, right there. In one shot, you got your 2 to 1. So you made your 2 to 1 very quickly, and you're out of the trade. This is the trade that I took today. And could it have gone further? Yeah, it did actually. So it went a little further, hit that 3 to 1. So at the 2 to 1 entry, if you had multiple contracts, what you would do is you would bring your stop loss. Your stop loss is right here. You would bring your stop loss to a little bit, just a little bit past break even. So right there, a little bit past break even. And what happens? Hits the 3 to 1 and starts coming back. Boom. And then it would have taken you out right there. That would be your procedure for your risk management. Now, it completely reversed. It's late in the day. It's after 11 o'clock. I'm in the market watching everything from 7 a.m. to 11. If something takes place within that time frame, I'll be involved with it. After 11 o'clock, I'm on to doing other things. I'm programming, I'm working with you guys. I don't want to be glued to the screen like all day long just doing this. But you can go for it. But the back testing that I did when I optimized the trade plan, 7 to 11 seemed to have the biggest moves. So I said, I'm trading from 7 to 11. We're still sideways, but we are breaking out to the upside. So look what formed here. We've got a rally, base rally, and it actually, whenever you see this type of formation, guys, drop base rally forms this candle, nice rejection, and an upward movement. If this breaks through here, we've got some really nice opportunities in this area. That's what I'm going to be looking for. We really want to see this break through that 1 hour structure. We already got the candles going yellow. So the Trend Cloud day trading system, which I'm still working on the course for you guys. So this is going to be sold as a separate system, but it's super powerful. Look at the moves that this thing is producing. It's been fantastic. So we are breaking out to the upside. Very nice. I'm loving it. I'm loving it. What are we going to look for? What are we going to look for as far as demand zones go? Here's the rally base rally that's breaking structure on our trending time frame. It's pulling back a bit. That's why it's turning red again. I've also seen this just break out a little bit above and then come all the way back down, break out a little bit to the bottom. That's called a broadening pattern. And what price is doing is it's shaking everybody out of the move, right? So how do you trade something like that? What if this thing goes from here, breaks just a little bit above, comes back down, breaks just a little bit below? What do we do? How do we trade that? You've got to look at your high time frame momentum filter and go by it. Daily chart, look how it's just starting to turn up. It's shaking everybody out of here. Everybody's going long in here, right? Oh, it's breaking out to the upside, go long. And oh, wait a second. Oh, it's breaking out to the downside, go short. Both of them are going to get screwed. Go by the high time frame momentum, right? Momentum's to the upside. All right, if it does come all the way back down here, right? If it breaks through this structure or this structure right here on the 5-minute chart, looks like it's forming a nice breakout movement. If it breaks through all of that and goes a little bit below, it's probably going to do something like this, right? It's going to come back up, form some kind of structure, break out, and then return to that rally base rally or a drop base rally, something like that. That is how you trade this broadening pattern. Breaks out to the upside, shakes everybody out going long, breaks out to the downside, shakes out everybody going short. Start looking. Now, if you get caught here, hey, it's only 1%. So you lose 1%, you lose 1%. So now you're 2% in the hole. 2 losses in a row, that's tough. But it's only 2% of your total current account value. And then now that you understand how to trade a broadening pattern and you're looking at your high time frame momentum filter and that's turning up, and your middle time frame trend, when this starts to turn green and these candles start to go from yellow to green and you're in here now and you see that drop base rally, you're ready. So is it better to wait? Yeah. So if you take a loss at 1% on the next demand zone, which is right here, here's rally base rally. The reason why we want this one is because of the time that it was formed. This up here was formed later in the day, 11 o'clock, and it also formed above the break of the structure. There you go. 68.35 to 68.18. That's the plan, man. But it's got to break out above here. If it breaks out just a little bit, might be a broadening pattern. Where is the curve on the daily chart? It's right here. Here's your curve. Okay, we're taking the bottom wick of the curve. If you want to take value, we'll put it right at the very top of that candle. Grab that magnet, bottom of the candle, and the top of that candle. So right there. There's your curve. high time frame daily curve. Momentum, beautiful. Starting to go up. We want that to match with our trend. We've got the break of trend. Let's take a look at the 1 hour time frame. We were hovering around in that curve zone. That's why the buyers started coming in, even though the move today was to the downside. We knew the breakout was going to go to the downside. We knew we wanted the retest of that breakout to the downside. It worked. It made us money. We took the target, money in the bank. We put money in our bank account today. That's what matters. But it was a little scary because you're shorting into that high time frame curve. So now we see these signals are starting to fail. That is a signal in itself. So here we go, breaking out to the upside. Let's draw a line. Here's the top. Actually, we can even say right there. It broke through all this mess. We have broken through all this mess. Hallelujah, it's official. The downtrend has been terminated. This is not a reversal yet. The downtrend has been terminated. Right there. So all of this in between here is sideways movement. All of this is sideways movement. Hallelujah, we are breaking out of there. Look what we have on the 1 hour. Rally base rally. We have a rally base rally on the 1 hour chart. Let's make that a different color. So is it possible that this thing pulls back? I think so. What's going on the 15-minute chart or the 5-minute chart in this area? Look at that. Isn't that interesting? See how we're forming rally base rally, drop base rally. Down here, rally base rally right here on the 5-minute within this 1 hour zone. So here's your 1 hour zone. Here's your daily zone. This is the daily curve. Look how deep that is. Within the daily demand zone curve, you've got a 1 hour demand zone right in here. Within the 1 hour demand zone, you have a 5-minute demand zone right here. If you wanted to take the full structure, you can go here, put your entry at that 886, and there you go. That gives you the best risk to reward, does it not? $350 risk. And, the sky is the limit here. Target 350. There's your 2-to-1, right? There's your 2-to-1 right there. If you're on the micros, you can trade multiple contracts. I would definitely do that. Trade multiple contracts and scale out of this position all the way back up to $78 or wherever this thing is heading. 73. Yeah. A lot of money. A lot of great buying opportunity. Now it went a little higher, so we would bring our fib level up to there. Now we've got some new levels here. And that's how you would follow it with the Fibonacci tool. So I don't like all these wicks here on the 15-minute chart. That's disturbing to me, all of that. Messy, very messy looking. So we're just breaking out. When things are messy looking, you have to go with the higher time frame. And to me, that is this rally base rally here. I like that. Do you see how this dropped down? We've got a major rejection. Very bullish candle here, right? So pulls down into this zone and just rips. Forms a rally-based rally, which means it's probably going to go either retest this or go a little bit further. So it would be worth taking the 886 retracement level first. I would not take this level because of this candle dipped into the well here and ripped. Obviously, this is not a level here. And here is the bottom of the leg. Now, the bottom of the leg here is actually a previous day's opening range. Take a look at this. If you go over here, say extend historical lines, and 5-minute chart, because we're on crude oil. Right here is the previous day's opening range that we never got back to. Never came back. It just missed it, went sideways, and then started to make the move up. Here's today. Pulled down, pulled back up. We got into the trade, made our 2-to-1, and then we're in that high time frame curve, and it just started ripping to the upside. We were expecting this, right? Yesterday I was talking about great time to buy crude oil. We're waiting for the formations to take place. Boy, oh boy, really ripped to the upside. That would be the plan. Nice break above structure. Will it come back to this? We don't know, but it's definitely an opportunity. If oil comes back to this area, you want to be a buyer. That is 67.43 to 67.03. And then what formed here broke out to the upside right here. And on the 5-minute chart, we have this zone right here looking really nice, green. So we're waiting for a return into this area. 1-hour chart. It could be heading for this previous week's low and make another move down. But we definitely broke the downtrend on that 1-hour chart. We definitely broke the downtrend on the 1-hour chart, guys. And that is awesome. So on the 1-hour chart, yeah, 1-hour chart, I'm all about this zone. I'm all about this zone right here. Willing to take a chance on that. So far, this is the story with Fibonacci, 886 retracement level. I would take that all day. That previous day's low on the 15-minute chart. Here's today. Here's yesterday. There you go. That would be my second attempt to go long on the previous day's low. So that's it, guys. That is it for today. If you have any questions, hit me up, chris@chrisgiuliano.com, and leave some messages in the Facebook group, and let's have a talk about what's going on. If you'd like to see anything back tested, put that into the Facebook group as well. I have a little poll going on there. Crude oil, gold, NASDAQ, whatever you want to see, I will do it for you. I will manually back test anything you want to see, and I will send it to you. Remember to take your targets. If you have one contract, you must take that 2-to-1 risk to reward, because the data says that is what's going to grow your account, and that is money in the bank. If you have multiple contracts, be my guest, scale out of the position. And that is the lesson for today. So that was gold and crude oil, 2 winners today. And hopefully we'll get that nice pullback into some demand and we can buy some crude oil. Thanks, guys. I will talk to you tomorrow.